So, one of the best ways for a buyer to purchase a business is through an SBA backed loan. Today, we have Marie Askew with us. She's a VP at Live Oak Bank. She's joining us to answer questions that will help make the loan process easier for both business owners and business buyers. Marie is well known and she's regarded as an expert in SBA funding. She successfully navigates complex loans to successful close. I've worked with her personally, and I'm really happy to have you here, Marie. So, first, I'd like to focus on business owners and then business buyers. I talk to business owners every day who are interested in retiring from their businesses or they're exiting to do something different. Marie, what are some of the biggest things that a business owner can do to make their business SBA eligible?
That's a great question. Thank you so much for having me here, Antoinette. I think sellers, as we know, there is an exodus. We call it the silver tsunami of businesses that have been around for 20 years. And there's huge opportunity for buyers right now to purchase those businesses, even though maybe the sellers have been a little bit asleep at the wheel. They're happy with their business. But now we have individuals coming in to integrate AI, new integrated systems, and sales, marketing, websites, and so forth. So I think it's a great opportunity. And I think sellers need to be aware of a couple of things. Most businesses or business owners have personal expenses in their financials, which banks are not the IRS. They're not trying to gotcha or what have you. But what I see a lot is that a great example is a personal car, that they will have a personal car, they'll run it through their business and those expenses. So they want to add back that car because when they sell that business, that car's not going to transfer with the business.
Yeah.
So if they have the documentation to support those items, then the banks will add those items back as a non-reoccurring expense. However, what we do see a lot in the market is individuals that are adding back an extraordinary amount of personal expenses.
Yeah.
For example, one that I see often is meals and entertainment. So maybe an owner has taken their family on a ski trip and then they decide with their CPA that they're going to write off this ski trip as a business expense. And the bank is like, well, I don't know, was that a business expense where they took clients, or was that a personal expense of the family? Are they eating out every weekend with their family, or are they entertaining their clients and their vendors in order to grow their business? So I think sellers need to realize it's what you can document. If you're taking that family to Hawaii, can you document those receipts that it was actually your family and it wasn't involved with the business?
That makes sense. They need to be legitimate add backs with supporting invoices that the bank can substantiate, is what you're saying.
Agreed.
That
Yes.
makes a lot of sense. Because at the end of the day, we want to increase the net income from the P&Ls, but they have to be legitimate. Once we get an offer, we go through due diligence, we open escrow, we have all the financials from the seller. So are they done providing financials? Is that the end of it once it goes to the SBA and you guys look at qualifying it?
No, I always like to tell sellers and buyers that it's a heavy documented loan, right? Any loan that you get in today's market, regardless if it's a home loan or an SBA loan, it's going to ask for repeated financials. I think sellers need to be prepared that they're going to have to provide updated profit and loss statements, balance sheets. They should have the same dates as their APs and their ARs, and they should be able to readily provide that documentation to the banks if needed. They should be able to break out their concentration for their client A, client B, client C. What is the percentage of the concentration of their client base? That's going to be extremely valuable for banks to realize what the risk is. And if that one customer doesn't transfer, what is the overall impact? Or if the top three customers represent 50% of the revenue. So I think that they should be prepared to provide financial documentation and be able to answer specific questions regarding their P&Ls and their vendors and their customers.
If I have a deal that's closing in, let's say, 1 month, what's the timeline for providing up-to-date P&Ls?
Typically, banks want all of the financials current within 90 days. So that means a personal financial statement from a buyer, as well as the profit and loss statements of the seller should be within the 90-day period.
Okay. You also mentioned something about accounts receivables and working capital. I see a lot of service businesses that have a high concentration of AR, or they have inventory or working capital needs. So my question is, can the seller, when they sell the business, keep all the accounts receivables?
Yeah, every deal is different. And of course, different structures for different folks, different businesses. So I don't think there's ever a right or wrong answer, but it is dependent on that specific business. If you are going to strip all of the ARs out of the business, then the buyer needs to figure out where they're going to come up with the working capital. And if there is a very long cash cycle for that business that they need a lot of working capital,
Yeah.
then they have to be prepared to either provide that personally or to have the bank to finance that within the loan itself. So I think understanding the ARs, the collection period, for example, if you have a property management business that collects repeatedly, currently every 30 days, the working capital cycle is very short and the collections typically are very high. There's very few accounts that are bad debt. But if you have a manufacturing business that has a cash cycle of 6 months or 3 months, then those businesses are going to have to still make payroll. They're also going to still have to pay for inventory and all of the work that's in process. So I think that those discussions need to be done early on and needs to be provided to the bank so the deal is properly structured. Those businesses that need more working capital up front are probably the more difficult ones to transfer because you really don't want to put that buyer in a bad situation when they're trying to get on board, they're trying to understand the customers, it's a stressful time, and then all of a sudden they're short working capital. And it's very hard to go back out to a bank and quickly get working capital if they're already behind the eight ball.
Yeah, so it seems like trying to determine the working capital requirements or the AR requirements probably needs to happen at the time that we as brokers list the business. We need to agree with the owners on that.
Yes, I think it's always a combination. I think that there's never a black and white answer to those, but I think those discussions should be done early on so that the buyer can go to their bank and say, hey, I need to finance $500,000 in working capital. Are you going to be willing to provide that for me?
That makes sense. The other thing that happens is sometimes people will sell just their business, but there are situations where they have a business and they own the real estate. What do you recommend to sellers that are trying to sell their real estate and their business?
Yeah, for me, I always agree that buyers and business owners should really take a look at the opportunity to own the real estate. That is a huge part of their future growth. It has control of the operations or rent increases, also appreciation of buildings, especially in certain areas like the West Coast. So individuals that are trying to buy the commercial real estate or thinking about it in advance are really ahead of the curve. However, what I've seen in the past 12 to 18 months is sellers have not been giving themselves the increase in rent to market. And what that means is that they're underpaying themselves rent, or in some cases, they're not paying themselves at all rent. And so they said, well, I've owned the building outright forever and I don't have a rent expense. And so they think their net income is $200,000. But when you add the building rent back into the deal, the transaction really struggles to cash flow.
So
Uh,
you recommend that they increase their rent while they have the business. They pay themselves market rent.
Yes, I think the way to think about it, how I discuss it with individuals is if a seller is trying to sell their commercial real estate with their business, I always say, well, let's just say you're only going to sell the business. And let's say that business is worth $1 million.
Yeah.
I always ask them, what would you charge a tenant for renting your building? And they'll say, well, market rent. And I said, well, what have you been paying yourself? And they say, well, nothing, or 1995 rates. And so those deals are more difficult to do because there's just not enough cash flow to support the purchase of the business and then also to support the additional rent payment. And again, in places like California, where real estate is incredibly valuable, that really changes the overall cash flow of projects.
That makes sense. What about disclosures? What type of buyer or seller disclosures tend to cause delays in the underwriting process? What do you find out sometimes in the underwriting process that the seller should have disclosed?
I think that sellers typically, I think business brokers do a phenomenal job of presenting the transactions up front. I think it really has to do with add backs, any contracts, any key employees that are maybe wanting to retire in the future or have seniority and have a lot of care to keep those individuals to transfer with the business. I think that's really a point to touch on is that many times sellers don't want to tell their employees that they're selling the business.
Yeah.
So they have not told the employees. And sometimes employees do not find out until the day that they close. And then the new buyer walks in and they say, hey, guess what? I'm your new boss. It's not that it's a bad thing, but I think people resist change or it is very frightening to them. So I think sellers need to prepare on what they think that the employees are going to do. Are they going to stay? Are they looking to exit? Or are they looking to retire? And is that an excuse for them to retire because they're worried about change? So key employees are people that have been there for a long time, foremen or supervisors or office managers, we really want those people to transfer with the business. So they need to consider, is it an employee retention or is it some form of enticement for them to stay?
Yeah. Yeah. Do you ever discover that a seller may have a loan that's outstanding, like a PLP loan or something like that, that was not disclosed?
Yes, that's a great question. Typically, what happens is that a buyer goes through the process, and through that process, once they get to a certain stage, which is typically the closing stage, that's when they pull what's called the PLP number or the authorization number for that project. So if that buyer had a previous business and maybe had an outstanding PPP loan from 2020, that
Yeah.
could actually trigger I don't want to say a red flag, but it triggers,
Yeah.
it's a flag.
Yeah.
And so what's happening in the market is those individuals then have to contact the SBA and they have to provide the documentation from that PP loan saying that it was paid in full and that they can provide the supportive documentation for when they did pull that loan. So that sometimes is a delay. So I think people that are buying the business also need to say, hey, I previously did have a business and did have a PPP loan or an idle loan. Here's
Yeah.
my documentation. They should be ready in the closing stage to be able to provide the documentation because now the SBA is going back and auditing all of those loans,
Yeah.
making sure that they were provided with accurate information. So regardless if it's on the seller side or the buyer side, if there is an attachment to an idle loan or a PPP loan,
Yeah.
they should be prepared in order to provide the documentation.
Yeah, I oftentimes will have buyers come in, they see a seller is selling their business and they're semi-absentee or absentee working 10 to 20 hours a week, and they love that. How does the bank look at that, the buyer coming in and working similar hours?
That's a great question. I see, those listings as well, absentee buyer runs itself kind of thing. And I really want to caution buyers that that really doesn't exist. Every business needs somebody to give oversight to it. And those businesses that succeed will have more oversight than less oversight. And the sellers that are only coming into the office maybe 10 hours a week or 20 hours a week to check on things, I always say, that guy's probably been in business for 20 years and he earned the right through those 20 years to then come in his 10 to 20 hour a week. I'm sure when he first got started 20 years ago, he was coming in the 40 to 60 hour weeks and even on the weekends to get that business up and running. So I think it's unrealistic for new buyers unless they're an industry buyer and they already have a business that's similar. If you have a person that already is managing multiple locations in an industry, then they already know what the time is. They already know the oversight that they're going to need. Not that sellers aren't telling the truth, but I always ask buyers too, well, how do you know he's coming in only 10 or 20 hours a week? Really, you don't know. But if he is, he's probably earned that right over decades of hard work to get to that point.
Let's talk about buyers now, because I see a lot of buyers, and we've talked about this before, a lot of buyers that are coming in, they're highly educated. They are looking for these service-based businesses that are not sexy. It's very popular now, but they don't have the direct experience. How do you handle those buyers or how do you screen those buyers?
I think that buyers that don't have direct industry experience, some buyers can have what we call managerial competence to that industry or some type of transferable skill set to operate that business. So
Mhm.
I think that they really need to do a very good job in providing their resume, but providing also the transferable skill that sets them apart from other buyers and really outlines how they're going to be able to manage that business. It's like the person that says, here's my Ivy League resume and they want to buy a yoga studio, but they don't go into any depth that they've practiced yoga for 10 years and they were a trainer for yoga, right? You have to also include that component into your resume to say, hey, this is why I'm interested in this business. And I do find that buyers are buying businesses not just because of a bottom line, because of course they want to make money doing it,
Yeah.
but they also want to scale the business because it's an opportunity for an entrepreneur to grow the business. But there's always some type of connection. It's very rare that somebody just comes out of college and they've worked in specifically in an industry and just pick some random business that they know absolutely nothing about. They really need to add that in there on why they want to buy that business and really what that connection is to them.
I hear a lot of buyers wanting to buy businesses with zero down payment. That's kind of a thing. I hear that. What do you think?
Earlier this year, around June, the SBA came back and redid some of the rules for SBA lending. I think buyers really need to understand that yes, you can come in with less than 10% down, but those are the rare exceptions. A buyer should really have 10% down of any deal. And the SBA guidelines now since June 1st really have indicated as such. They want that buyers come in with skin in the game, that they're willing to pledge their own personal cash into a deal. And quite frankly, most deals don't cash flow when they have this very small down payment. Just one little hiccup in the market or something high leverage is really never a new buyer's friend. So I think every buyer should be prepared to put a minimum of 10% down. And they should also have some personal reserves. If a buyer's trying to buy $1 million business and they have $100,000, that's really not a good position for a buyer to be in. They really should have some personal cash reserves for their family, for whatever incidentals may come up, and then have a down payment for the business.
When they buy the business, a lot of times buyers have questions about collateral. Do they always have to use their house as collateral?
I think buyers coming in to buy a business should know that the SBA requirements want the banks to take a secondary or even a third lien position on a primary residence. So they should be prepared to pledge their primary residence, or if they have additional rental property, those individuals need to know that it's not the bank's guidelines necessarily, but it is the federal guidelines of the SBA that are telling the banks to do prudent lending and take those primary residents as collateral. And many times these deals are not fully collateralized, right? So we are being reliant on the historical cash flow of the business and the borrower's ability to manage that business. So those are really the two things that Live Oak in particular looks at, is the historicals and the performance of the borrower to be able to manage that business. So collateral is great. Some banks require it, where Live Oak is more about the person that's buying the business and the history of the business.
That makes sense. This is hot off the press. This just came out yesterday. Talk a little bit, just a little, because I know it's new, the America Manufacturing Finance Act.
I think over time, SBA has done a phenomenal job in understanding that the market has moved, right? When you bought a building 20 years ago, the dollar amounts were significantly different than they are today, especially in manufacturing, which is normally heavily reliant on either large real estate area or space to manufacture, or even to buy equipment or a merger and acquisition for these manufacturers that want to expand or roll up or purchase other types of businesses. We did hear some rumors earlier this year that they were thinking about increasing the limits to meet the market. But with manufacturing trying to be brought back to the United States, SBA did listen, and they have increased the limit from $5 million to now to $10 million. So that's a huge opportunity for any businesses that are in manufacturing. And I also do feel that it's an opportunity for more middle market sellers that were looking to try to sell their manufacturing business that maybe didn't fit quite into middle market, but didn't really fit into the $5 million limit either. So I think that those are going to be a great opportunity for sellers as well.
That's great news. And my final question, Live Oak Bank, you guys are a preferred lender. What does that mean?
Preferred lenders means that the bank has done a great job and that they can basically underwrite and approve their SBA loans themselves, and then they pull their PLP or their authorization number. I think Live Oak Bank is just a premier lender. We're very hands-on. We give a streamlined process. We utilize a lot of technology throughout the process. So everything from the front end really transfers through the pre-qualification process to the underwriting process to our closing process. And hands down, I really do feel that Live Oak Bank's closing process is probably one of the best in the nation. We have wonderful teams that are really great drivers. They really explain what the checklist is, what is needed, and they really drive to close. So I think we do a good job on structure as well, but it really is just a premier lender in my opinion.
Thanks for being with us, Marie. If someone is interested in an SBA loan, how do they get in contact with you?
They can contact me. I'm on the website. My contact number is 209-747-0151. You can call me, you can text me, or you can email me at marie.askew@liveoak.bank.
Thanks for being with us. Don't forget to hit subscribe. We talk every week about selling businesses, increasing your profit, and setting you up for retirement or your next move.